Good morning and welcome back to the Opportunistic Trader for December 27th, a Thursday. 2 days left to mark in the year to try to save the month. Maybe they'll have them green this month after being down the most in history. Yesterday was a record point day for the Dow and I think the S&P. I could be wrong on the S&P, but I know they said for the Dow it was a record point gain. Markets were up across the board 5%. European markets were closed. They actually reopened and they're down to the low tick of the year. So the DAX is trading at 10,400 and that's the low of the year. And the DAX is down 20 big percent for the year. China fell out of bed last night again, trading on the lows of the year, down about 25%.
And that was the reaction was news based that profit margins are even worse industrially. Just throwing that out there.
Yeah, I can't believe how much these indexes are down, and as I'm sitting here, they're even going lower as the S&P is going higher. So somehow, I don't know what is going on, but it made me laugh yesterday on CNBC. We're winning, exactly. On CNBC, they kept going, we're 5,000 Dow points from an all-time high. Like, why are they even saying that? But I guess if you move 1,000 a day, you'll be there in 5 days. So this has become computer mania, rigged computer mania. It's funny. Everyone cries. Like Lee Cooperman cries about the computer, but really the computer is the only thing that could make what happened yesterday happen.
Look, up algo's good, bad algo's down.
Yes.
Right. But you made the point in the overnight report. We made a report and which is based on a lot of the commentary that you're making, that it is near the end of the year and you have liquidity, but that liquidity is computer generated. So you made a comment yesterday about we had a real order and the market traded to the order. The market may have dropped a little bit. We had a real order and it got filled. And when you have this electronic liquidity, people should understand that it is liquidity, but it's not the kind of liquidity that trades to size. It runs away from size. And so I think yesterday is a large part of what we said in the overnight report, which is HFT versus HFT. They're running away from each other. So I don't know what the volumes were, but I think that confirms what you just said.
I think they were pretty strong. They've been strong all week, but I wasn't here late in the day, so I did not catch what ramped us. I was short. We got stopped out. I was pissed, but I guess we're actually almost at the level where the stop was, but we went $50 higher than that, which is just it's actually ridiculous out there.
I have a question for you. Can you clarify or define this concept of liquidity that basically in these last 2 days, I think people, especially people that are trying to understand how algos affect the market, subscribers that may not have as much experience in, should I panic? Should I worry about them? Should I blame them? The concept of trading volume at a price versus continuous liquidity. Like yesterday, we may have had some high volumes, but it wasn't chunky at a price. And when you see one lot's traded every price all the way up, it may have been heavy volume, but we had a big range, as opposed to, like you said, a 3,000 lot order that trades in a 5-handle range. That's the market runs away from you, and it's kind of hard to trade when HFTs are doing that. I mean, do you want to comment on that, as opposed to giving you a level to get in?
No, I think it's very dangerous to trade the last 2 days of the year. The last day especially is a half a day. It's just going to be a liquid. My thought is that they want to buy them with both hands. They're doing everything they can to try to buy. So the market should be a lot lower than where it is, basis where everything else is in the world and where it sits for year end. But for whatever reason, the algo's got the spin to buy. You can't get in the way of it. You just got to let it do what it does. Who knows how high it'll go. It's just amazing on a down month where we're down 10, 12, and yesterday really 14.5 coming in. that these guys can just ramp the market a third of what it's down for the month in a day.
Right,
So
right.
that's
And
leading me to think that next year is going to be even more volatile and more crazy. And it's funny, that
that's a quote to
low,
write down. That's a quote to write down. Seriously, people should pay attention to what was just said. If they can move it 1,000 points in a day, and it wasn't entirely a liquid, even though it was very largely machine based, the volatility is not dead. So there's your comment.
well,
That's a
listen,
comment I think people should remember.
we're still at a 32 volatility. Um, if this move was real, we'd be at a 22 volatility. But I want to point out again, what I'm seeing is this divergence between the January VIX and the VIX cash. The
Right.
VIX cash is at 32. The January future is at 25. So again,
That's a nasty, nasty backwardation, and that is well. Actually, what's your take on it before I give you an opinion? Because I
well,
have
I
shown it.
think it's just, and it's interesting because the other contract in December went off the board at 35, and that never went up and never went up until the very end of the move, and then it went up. But
Right.
I don't really understand it, but it's been trading that way. Maybe you have a better idea.
Well, there's two levels to it, and one is the handle. I'm going to give the people two handles, and I'm going to re-articulate what Larry has said because we have a lot of new subscribers over the past month or so. What we've been discussing here with one of the things, if you understand the structure of the VIX and why it's important, uh, first to re-articulate what Larry had said before, and that was several different ways, several different times. And that is when we were going backwardated, meaning the spot VIX or the short data VIX was higher than the longer term data VIX in these sell-offs. That was in part because fund managers were underhedged but did not want to spend a lot of money on longer term hedges. So they spend as little money as they could because they were in denial that this was going to be a protracted sell-off. And so we got our first backwardation when that happened. And these fund managers, so that's one of the reasons you go backwardated. Fund managers in denial who don't buy insurance until the last minute, but they don't commit to buy insurance because that's what buying a put is, where the VIX is. You're buying insurance for 5 years. They don't do that. They buy insurance for 5 minutes. Now, once you have a situation where you have fund managers that are long the spot, what ends up happening is, and that's Larry's point. Larry's point is that they don't spend a lot of money. They buy some insurance and you get some backwardation. You get this divergence or short term. It starts to trade like a real commodity, like oil in a bull market. And now what's happening, and this is my point going forward, is number one, like Larry said, the VIX stayed up even in a massive higher move yesterday. The VIX should get crushed today in a lower move, and it's not. What I mean by that crush is maybe down 1% after such a massive move higher. It hadn't had a chance to breathe. But what I want to add to that is the term structure today, right now. When you combine the concept of Larry said the funds buy short term rather than spend a lot of money because they're competing with passive money, they have to keep their expenses down. With what I'm about to say, which is what Larry said, the end of the year is here. People are loath to spend money going out into the next year. They may not even have jobs next year. More people will be piling in the front than the back. And that also attracts VIX speculative funds that play the backwardation role. They're along the front and they will keep buying the front and then they'll just roll it. And you will keep this backwardation for a long time because it's kind of like a dividend. That was a long drawn explanation, but the concept basically is people don't want to spend money into next year yet. They're staying in spot as long as they can, which means next year is going to be even worse for them. To Larry's point about volatility continuing or possibly getting worse next year because they didn't commit to next year. It's like I'm putting a band-aid on a bullet wound. And next year you got to put another band-aid on it. And you keep paying up, paying up, paying up. And this market could have a backwardated vol system that stays that way even in rallies as long as we're below X%. But like you said, 30% is not a comfort level for the vol.
How much was the NASDAQ up yesterday? Do we know the NASDAQ future, how much it settled up? Just curious. It's only down 100. We're It's just interesting to me watching the stacks melt. It actually bounced about $15 here, but it's down $220.
Do you want the
Five,
NASDAQ or the DAX
the Nasdaq.
move? The NASDAQ, you want low to high?
No, I just
Or
want to know from settlement what it was up yesterday.
so it was so the open was 59, it opened at 59.02, closed 62.76. So 374?
Really? That's freaking
That's
awesome.
insane.
It's awesome.
That's insane.
361 for the cash.
There you
That's
go. I was looking
awesome.
at futures. Open to close.
That's awesome.
Yeah, it was
So
up 374 in a day, but 6.3%.
116 for the S&P and 1,086 for the Dow.
That's so awesome.
I mean, the Nasdaq's the awesome one. I mean, that thing is just like on crack. It's sick.
Can we create a marketing? We should create hats. Opportunistic trader on the back, along the band, and on the front, we'll put Nasdaq. Nasdaq 9,000 or something like that. I mean, it's just bizarre.
I just can't believe the sentiment changed in a day. Now no one wants to sell. Everybody thinks the market's going higher. It's actually amazing.
Do you see this behavior in the S&P this morning? This pullback as indication of a beginning of the negation of yesterday's rally? Clearly, it sounds like you don't.
No,
I'm a little
I
bit worried
think
about
that
it.
they want to buy them. I don't know how much they're going to buy them or what they're going to do, but they want to buy them. I just don't see how any of the mantra that we were worried about has changed in a day. The government is still in disarray. The House is turning over in a week. Trump is like basically, stuck in a situation. The China thing, we've got to be over 60 days since they met or close.
Right.
Okay,
and Foxconn is already considering building factories out of China. China's got to be getting crippled by this.
But they're not
Legitimately
caving,
crippled, not just
Vince. They're
know.
never caving. Never.
I know.
Never.
So
the bottom line is Trump will give him another 90 days or whatever. Who knows?
Right.
But at the end of the day, it's so bad out there. But the market just doesn't care right now. It just wants to mark to try to save the year.
So it's looking for it's kind of like this. If you believe, if you're an active trader and you believe that the market, you come in with a bias that you believe, not married to it, but it's a bias, that you believe that they want to market for the year, then look for the market to overreact bullishly to very subtle, small bullish news. Like today, the Wall Street Journal reported that Powell is willing to sit down and meet with Donald Trump. To me, that means Powell's gonna sit down and have some coffee and say, okay, I'm gonna do what I want to do anyway. But
he can't not meet with Donald Trump. If Donald Trump wants to meet with him, he's got to meet with him.
Of course, but if the market takes that, let's see how the market digests that. If the market rallies hard as the day goes on after it digests the jobless claims, then the market really is just looking for excuses to rally. Ling Ling the panda had a new baby, and the market rallies 100 handles. Then you're.
I'm just curious. This is what makes me curious. The market dipped into bear market territory in the S&P for basically one day and rallied 5%. The whole down move was 20%. It rallied 5% in a day.
So let me ask you, the actual technical definition of a bear market is a 20% move, right?
I guess. I mean, that's the way they're
that's the way they measure it.
Well, I measure it from unchanged. I don't measure it. If the market's up 40% and goes down 20, it's not in a bear market in my book. It's in that's a correction off a crazy high.
A bear market is down 20% for the year, or 10% or 5% for the year,
right?
Whatever. I agree with you. You can't measure from highs,
right? But that's what they do.
I mean, well, that's the concept that Michael and you and I were talking about off the air. Conceptually, if a market is trading 5,000 as opposed to 2,000, just to exaggerate the concept, a 20% move off the high is not a negation. It's just from a higher number. So a 20% move from unchanged on the year that's a bear market. No one's losing money if it's 10% off the highs. You're losing money if it's 10% off down for the year.
Can you guys tell me how much the S&P is down on the year? The S&P cash, I have 7%, 7.7. Don't know if that's right, but if it is, it's amazing. It rallied almost half of what it's down on the year in a day. So
Let me,
I have
So in
it
the
down
Mike has
future,
better
this
handle on
second
the
is down
cash than I do.
8.94%,
with the futures.
where it is this.
Yeah, no, I was talking about just off the cash close.
Oh,
The,
yeah.
the
Yeah, I'm trying to pull
SPX
that up now.
cash. Yeah,
Do you
it makes
think?
sense
Do you
because
think?
another 1.5% on top of that puts us down 9%. Like this thing will be down, if we're down 1.4, it'll be down almost 9%,
Do,
9.1%.
do you think there were do you think there were big player shorts, or what type of buyer do you think there
7.7%.
was yesterday that got
Yeah.
this started? If it was coincidentally at the 20% imaginary bear market number.
No, I don't know. I just don't know who's
How can
buying
you
a
know who's
market.
buying?
Like they're coming in today again. Okay, first of all, everybody went home max long last night.
Right.
Any trader, everybody is long out the wazoo. Okay. That being said, if we do open down 1.4% and stay there, we're going to be down 9-10 for the year. How do people have money to still buy? Because we're down 9-10 for the year, but we were up 10. So we really sold off 20, and the stocks are down 30 to 50, and people just keep buying. So I think again, it's 2 days in the year. I think it's a bear trap. I just think that they're taking the market up into year end to try to save it in market.
Right.
They're going to look at their returns at the end of the year, and they're going to be down. Their portfolio is going to be down 7 to 20%. And what are they going to do next year? I just don't see where the good news. Where's it coming from? What we're going to do a China deal? I mean, that's about it. What else
In
is
fact,
there?
to your point about the China deal, if anybody's looking for good news around the corner, here's what's coming up around the corner. More uncertainty. And by that, I mean more political uncertainty that affects our economy. Number one, the China deal, we're going to start talking to China in January, hopefully allegedly have some sort of a semi deal by March. You got the changeover in the House of Representatives and Congress, okay? And then we have another negotiation coming up with Europe and Japan over trade. I don't have the dates, but that's in the second quarter of the year. We also there's a problem with the World Trade Organization. And what my point is, to the increased uncertainty in the markets that translates into volatility, the United States has been called I'm going to say this about what Trump, the administration, has done, not the person. The United States has not become isolationist in the sense that they're taking themselves out of the world's affairs by boycotting certain things, or what we're becoming more unilateral. And by that I mean, when we back out of, say, an Iran treaty, we're not isolating ourselves. We're reserving the right to act on our own. That's uncertainty. When we back out of a Kyoto thing or something like that, that's not isolating ourselves. That's just saying we hold ourselves to our own standard. Now we're refusing to fund the World Trade Organization situation about that. I mean, everything we're doing, and to be fair, even if you disagree with it, just the fact of the matter is, everything we're doing is pulling us out of global kumbaya stuff. Like it or not, our actions are creating uncertainty, and it's not going away through the first 2 quarters of next year. That's just a fact.
Yeah, I agree with that. And that's, my thought and the mantra that I see. But looking at the markets from the outside and looking at this DAX ticking the lows of the day, down 225 points, and every second they're trying to buy the S&P and the NASDAQ after the NASDAQ was up, 338 yesterday? And that's something, I mean, I've never seen it up 238. I
know.
I don't know how it was up 338, but it was. And fortunately or unfortunately, I missed it, and I wasn't sitting in front of it. But I'm watching the DAX right now melting. It just melted another 30 points. It's down 250 points. Never rallied. Never was open to rally. So that's made a low on the year
Right.
for the year. We're 5%, or actually, you got to take a
But what are they
percent. We're
taking their
But if you
3.5%.
take a look, like for instance, before yesterday, China was only down 3% month to date. DAX was only down, I think, 4%. So, you know, it was really a huge story for December was the U.S. underperformance.
I get that, but why would
we
they be
we just
melting
negated
now
it.
into us rallying? It doesn't
Right.
make any sense. If they were the strongest market, why would they melt? They've held up, and all of a sudden we've had our biggest rally in one day in
Right. Why
history,
would
and
they
then
not
they
follow our
melted.
lead now? This is a big divergence, right?
It doesn't make any sense.
Y- y-
Listen, it
To
makes
Michael's
sense because
point,
it makes no sense, but you're saying it was the strongest markets in the world, and they were only down 3, but now they're down more than half of what they're down on the month in a day after the market here rallied, 5% and 6% on the Nasdaq. So it's weird. That's all I'm saying. It's just weird. I'm
Well, I
watching it.
think that also goes with we are in the least liquid time of the entire year right now, where it's the end of the year. A lot of people are not at their desk. Yesterday's price action was a lot of computer generated orders, not many.
Well, what
And
was the E-mini volume? I bet you we did over 2 million. I don't
I
know.
don't have it.
Can you
but
look at
Mike, I have a
the
question for you. I have a
E-mini
question for you
volume?
because
What were you saying, Vince?
well, my question is it's I think to both your points, and I want to just make this point. If or actually just throw this out there to chew on, and it's not volume based, but it's based on um, if we rally and the DAX doesn't follow suit, um, uh, I mean, that's like a reconnection with the whole year's trends. You know, I lost the train of thought on the question, but the point I think is that I mean, if who's painting the clothes over there? If there's no liquidity here, who's painting the clothes over there?
Yeah.
You know, those markets should be following. Do they not take a lead from us when we rally? I mean, my
I
No.
think
goodness, if we
going
didn't
back,
rally
I
yesterday,
mean, I
what would
personally
happen?
think there's just so much dislocation. I think that people have been caught off guard by the severity of the decline in the US markets. Once again, getting back to some of the themes for the year, I remember having conversations with Larry, Mark Fisher, tons of people in July, August, September about one of the key themes was selling global everything and just pouring money into US equities that pay dividends. We're
Right.
seen as the safety. And I think that it was a theme for really 2019. And this month has been a bloodbath based off of
So
that.
okay, so to your point, the year has been the theme. The first half of December was a reversion to the mean or a negation of that theme a little bit, and now we're back to that theme again. That's kind of the way that's my
Uh,
takeaway from what you're saying. It
Well, I'm
makes
not even
sense.
saying a revert. I don't think anybody's getting back to anything. I think people are starting to just licking their wounds, trying to, salvage whatever they can, get their positions
Right,
in order for next year, and
right,
try to figure things out. I don't think anybody's doing a whole lot of I think there's a lot of tax things that are taking place right now.
right.
Also,
End of the year
based off of the
mechanics and
severity of the
cash flows.
sell-off, people, even asset managers, have had to revise what they were advising their customers based off of, all of a sudden, they were advising their customers something when Amazon was trading 1,800. Yesterday was trading 1,350. All of a sudden, maybe it makes more sense to sell it and take the gain.
Right.
A lot of different scenarios. But I do have
There's
an
mechanical and cash flow issues that are definitely uh, playing with normal correlations, if there are any normal correlations anymore. But your point is very
And
valid.
then you get to different things of short-term traders possibly having issues with the volatility, maybe doing something with shorting options. We saw it in natural gas. Obviously, natural gas is a much, much smaller market than, the
Right.
global equity market. But we've seen it different times in February.
FCMs could be tightening the
There
reins
was
on
a
people too.
situation with FCMs in February. I'm not saying I actually have not heard that as any FCMs having issues, but we've had a serious move, especially on an illiquid Christmas Eve day. That was a big move the day before. So, I'm sure there was some margin selling the days before that.
Hey, that's all good points because things. It's kind of like if you trade options, the front month of options becomes disconnected from the rest of the curve, and the same in futures. Well, the last couple weeks of the year, everything becomes untethered, and it becomes on individual issues that have to be dealt with as opposed to continuous relationships. Hey, Lar, I would
Yeah.
be interested in, and I don't have it on my screen. Since you're such a big follower of the DAX, is there a DAX VIX that you watch as well?
I don't watch it. No,
There is,
That
though,
would
to
be
answer your
there is.
question, though, there is that product because Kai was on with us months ago, and he was actually trading a relative value like the U.S. DAX versus that.
I was wondering about
I
that.
don't
Yeah,
follow it. He definitely was on our program talking about it, but I don't have that symbol in front of me.
that would be fun to look at as a four-way correlation. You know, if you're like, oh, the DAX is down, whatever, but then liquidity is also an issue. I'm sure that if there's a DAX VIX or something like that, it's probably not half as liquid as ours is.
You know, I don't know if we touched on it, and we might have. I was looking away, but did we talk about crude oil yesterday?
No.
Quietly, crude had a 9% move yesterday. But you know, it's a 9% move coming from $43 or $42. I don't even know what we traded the other
Yeah.
day.
Crude
But
lost in the headlines.
yeah, I mean, it was a big move there. I'm just going to pull up the chart for everybody to see, but that's another example of just a dislocated market. You know, we've seen a significant decline there. We were trading 42 and a quarter, and then rallied up to 47.
If you look at the if you're just visually, I'm not saying to be a technician, but if you look at the last three candles, meaning today, yesterday, and day before, for crude front month futures,
Yep, I
they
got it up.
very much mirror the candles the last 3 days for the S&P or any index you look in the U.S.
Yeah.
Crude is now back to trading like a stock after its massive stock related as well as cash flow related as well as fundamental sell off. I'm just
Yeah.
saying it's mirroring us a lot.
Yeah,
now.
but and I agree with you, and I have both of those up, and that's the evidence. It is right there. But you know, Larry and I were looking at some of the individual names in the energy sector, whether it be Schlumberger, Halliburton,
Right?
they're destroyed. I mean,
Oh, absolutely.
really.
A lot of them have leverage.
Well, that's
A
what
lot of
makes
them.
me leery this year. It's the indexes, the broad-based indexes, which, you know, Gunlock mentioned will be the bigger issue. I think they've saved people because if you bought these names, any names, all the names, I don't know what's up to keep the market where it is, but these names are destroyed. I mean, just
I have
destroyed.
Schlumberger up right now.
Well,
We were trading
indexing
90.
is going to increase more because of what you're saying, and you're right about that. And the example I can give you is speaking to a fund manager out of Greenwich. I said, "What do you think is going to happen now?" I actually threw at him what you said, Larry. I said, the indexes are down 10%, but individual names in the indexes are down more. I go, then I was talking to him because he's a long short fund manager. I said, "How did you do?" He goes, "I got killed both ways because he had the wrong pairs on." He said, "But there's going to be an exacerbation of the trend." And I said, "Why?" Of going to passive money. I said, "Why?" He goes, "Because if you're a high net worth individual or you're a doctor with some money in the market and you put 70% of your money into passive money and you've got 30% that your broker or wealth manager covers, he probably parks a lot of that in the big names that got hurt. And so you're going to say to your broker, I'm going to take more money away from you and put it in a passive managed asset." So there's your point, Larry, to your point. When you have an index down 10%, but you have individual names down 30% that people have plowed their money into, it only encourages more passive investing, crazy as it sounds.
No, no doubt. I mean, it makes it easier. At least you got one thing to look at. But I'm
Right.
just looking at stocks, and you know, we talk about Schlumberger, Halliburton, da da da. Da. You go down the list; they're down 40s. They're not down like 40s and 50% at least. Okay. Then
They
you go
must
to
be heavily leveraged.
AT&T, GE. You know, you can go through all of these names, and I kind of think for next year, those are the better plays, and these high flying, crazy FANG names that are computer. You know, FANG is only what it is because it's the only thing people can day trade. You can't day trade AT&T; it doesn't move enough. So they need to be in Amazon. Everybody is in Amazon. You know,
Right.
they have to be in it because it moves 50. Yesterday moved $125 or something. That's just awesome. So,
And volatility didn't come in
but
because
you could tell.
it just moved too
Listen, I've been
fast.
around this block too long to know they want to buy this market so badly with 2 days to go that it's unbelievable.
Is there anything, okay, if you have that as a bias, right? Just, for the moment, not necessarily all day, you could change your bias if you see something, like, what are you looking at right now that would maybe make you pull a trigger to buy? Now, I know that you prefer regression to the mean, but
No,
would you
I'm
look
not,
at
I'm I this is perfect for me in this area. The only problem is the market should be down 50 handles right now, minimum basis everything, maybe more. So I feel uncomfortable buying down 35, which is a lot. I mean, I can tell, I'm looking at the Nasdaq, they want to own this thing. I mean, it's like it was just down 100, it's down 80. They'll have it down 40. I mean,
well,
they want to own it. They're running at listen, they're running out of time to mark their book. They're running out. And
well,
and
I mean to put you on a spot in a very friendly way on this. Are you saying that you would rather it gas out a little bit more before you buy it, and then you think there might be a little bit more downside to give you the level to buy, and you're
yeah, I'm
uncomfortable
not
buying
in a
it
rush
because
to buy. I mean,
right?
I do see they want to buy. I mean, I
So
think if you buy S&P futures right here, you're going to make money. I
right,
don't know if
but
you're going to
that's
make 5
exactly
handles or 10 handles or
that's
20
what I'm trying to
handles.
bring out. That's
Um,
exactly the point.
yeah,
You,
I mean, there's no
but
doubt.
that's
And
not your
listen,
style,
but the
right?
problem with that trade is when they turn this button and people have stock for sale potentially, you're going to get run over. I don't
Right,
see that. I can see since I walked in, they want to own it. You know, they
right.
just want to buy. Now the Nasdaq's down 79. In a minute, it'll be down 59. I'm telling you. Now it's honestly rigged.
But
You're operating in a rigged environment. So
I think
I got lucky, I guess, yesterday doing 3 trades and being profitable on 2 and not great on 1. It was kind of like a little winner, but nothing really on the day. The bottom line is, in a way, I'm lucky because those aren't my kind of days. Actually, we've never seen those days, so I can't even say that's not my kind of day.
but that's a risk management. I know what you mean. Trend days are not your kind of day, I'm sure. But that's what I'm talking about in terms of risk management. A lot of people will ask us, and I think the person who's hardest to get a dry answer out of is Larry. They'll say, where's your stop or what's your risk management? And he just gave you his stops in his head. If you're listening, he basically said you can buy it here, and odds are you'll make 5 to 10 handles. But I don't want to be stopped out because I think if this turns, there's another 30 handles below, and I want to be able to have my powder dry to make 2 or 3 trades today. So there's your risk management in terms of where's your stop, Larry? Well, my stop is I'm not getting in because I don't see it. I can see myself making 10 handles, being long and losing 30 handles right now. So
I just think
already,
the market should be down 50. Basis everything I'm looking at.
right.
Basis bonds are up almost a stick. And we were talking before we got on the air. A stick is still 1 point in bonds, not like S&Ps.
I know.
Where 10 handles was a big
Yeah, there's
move.
an
Now it's
example.
100 handles.
There's an example. I want them to say, a twig. If they change stick to twig,
Right. 10 handles is a twig. 100 handles is a stick now.
right.
We've got, as far as schedule, good schedule. We got Tony. And 11 o'clock, we're actually Adam Collins. Will
Sounds like an exciting day. Volatility is up 5%, not really too much. Rattles are high for tomorrow,
That's the
ladies
thing also,
and gentlemen.
the volatility, whatever it is, up a few percent, down a few percent. We're at 32 on the VIX. I mean,
But
that's a
these
significant
straddles
number.
are the
Yeah.
30 straddle is $55 bid
for tomorrow.
At least
So-
55.
In a put
56.
skew market, I bet you this straddles a call skew today because of what you're talking about, or it's less of a put skew. You know what I mean? If you look at the out of the monies, the butterfly style, I bet you this market is bias bullish and people are looking to buy calls on it today.
I mean, it's obviously always skewed to the put side, but maybe.
But on short dated options, you might actually on a
Yeah,
day
I
like today.
don't really see that, but
No,
I
that's
definitely
just speculation.
see I see high prices.
I'm just looking at some of these prices for tomorrow.
So,
The 2500
Larry, your winning
call is
trades
turning
were
5 at 6 right now.
your winning trades were longs yesterday, weren't they?
No, one long, one short.
Okay.
Short,
I bring that up
short
because,
originally, then long, and then short and run over.
well, I bring that up because, but you got run over, but you didn't get, at least it didn't back up on you after it killed you the
Yeah,
first
you
time.
know what though? It's just still aggravating. Aggravating month. Next
bring
month
that up
I'm gonna do more trades in. All I can promise, I'm gonna do more trades in a week than I did all of this month. But the
Right.
last 2 months, what happened to me is my first like 8 trades were just so terrible that put me in the hole. And you're a different trader when you're in the hole versus
Yeah, but you set the
out
bar
of the
high
hole.
after that first month. The bar was set high too.
No, we did 4 really good months without
Yeah.
really ever being in the hole and giving really, really good ideas. That being said, that doesn't mean much. Oh, you know what I want to just quickly touch on is the dollar, I guess, is trending back to the highs of the year. I see the Canadian dollar this has got to be the high tick on the dollar versus the CAD. I see it at 1.
50
What do you mean high tech?
But the other majors, euro, pound, dollar, yen, were actually over 1.5% up.
Oh, we are?
Yeah, the DX is strong against many currencies, but Michael, what is it? The DX is 40% euro or 60?
55%.
There you
Yeah,
go.
but
So
the
almost
euro's
60.
kind of, what was the low? I mean,
12.20.
yeah, so we bounced 1.5 points. They'll
The
take
reason I
that
asked
out.
you if your trades were all shorts yesterday, Larry, is because when we were on the air, actually when I was setting up between the Gold Fix and joining you, my younger son Cooper, 10 years old, I was spending a minute with him, showing him the site and showing him how we interact and what we do. And then I was just showing him some candlesticks, and I just asked him if he was bullish or bearish, just looking at a chart. And then he's got a picture of our front of our logo. Okay. And he said, and I introduced who you were, and I said, he looked at the logo, and out of nowhere he said, "Is Larry always bearish?" And I said, "Why?" He goes, "Well, the arrow is pointing down on the chart." He was looking at the logo, and I said,
That's
"No, he makes money
funny.
buying once in a
The
At
while."
least-
logo's pointing up. The logo has the last arrow is the only arrow is really up.
No, but
What are you
it's
talking,
funny.
Vince? Are you sure you're showing him that logo upside down or right side
No,
up? What do you got?
there is. It may not be the logo. Hold on. I was going to the home page, and on the home page you have. I'll find
Well,
it. But
I'm glad I was, because the market's down this year. We if it flips up next year, we're gonna flip the logo. We're
but it may not.
gonna have it going the other way.
Does our logo? Does the logo point arrow down?
Yeah, it's
Okay. Well, here's what I'm getting at. He didn't see the logo. He must have seen a graphic on the home page, because when I opened up
Vince,
at the
this
home page,
is
where he said
awesome.
it. He said, he goes, "Is Larry always bearish?" Hold on.
Bring him
Go
on
to
the
the
site.
I
home
was
page.
about to say, you said his name was Cooper?
His name is Cooper.
All right,
Bring
ask
him
Cooper
on.
where we're closing the year in the
Right.
S&P.
Give us a close, Cooper.
He's like, and he also said this, and I know you guys are going to laugh at
Ask
this.
for more support- ask for more
$100.
support and resistances.
Look, when a 10-year-old says to you, "Hey, Dad," because I was showing him different charts in the same scale, he said, "Dad," and I showed him, because I was just finishing up. He's like, "Hey, Dad, the gold chart, it looks kind of cool." And then I said, "Well, what do you want to see now? Can you show me the stock market?" And I put it up, and he went, "Wow, that
Mhm.
moves a lot. Do you trade the stock market, Dad?" I go, "Yeah, but I trade a lot." He goes, "Well, you should trade something else. It doesn't move around enough." So the words of the wise from my 10-year-old. I'm looking for
Awesome.
this down arrow. I'm going to find it. He saw down arrow.
Well,
Cooper,
I'll tell you
Cooper
that
Barrage.
the DAX is on the low of the day, actually ticking a new low. The SPU is down 40. It should really be down over 50 basis where everything is.
Oh,
Yes, that's the
I
bias
found the
to
chart.
buy. What
I
happened?
found the chart.
Oh, it's a
It was
chart.
it wasn't an arrow. It's the chart on the home
Vince.
page. Everyone go to the home page who's not a subscriber, and go to the home page, just watch for the master class. and it has the points of buy and sell. Well, that has arrows, and he was looking at it, and it ended on the lows, and he saw all the red.
Just
He
let
said-
them know we're bullish on up days and we're bearish on down days.
Exactly. But it's funny, he
That is
tuned
awesome.
right to that.
That is
So,
awesome.
All right, so we'll be talking with Tony Greer at 10 o'clock. If you have any questions, put them in the chat. For Tony, Adam, Larry, Vince, anybody, put them in the chat. We'll definitely be back throughout the day, but we got the open coming up in about 20 minutes. We will talk to everybody soon.
All right. Good luck, Vince. Take your son out. Don't let him watch the market today. Have a good one.